Welcome back to the Crypto's Key Conversation. I'm going to jump in this one and start with Digital Asset Investors tweet here. He's responding to Chairman Gensler here where he says, there's no reason to treat the crypto market differently from the rest of the capital markets just because it uses a different technology. And that's what Chairman Gensler of the SEC said. Digital Asset Investor responded saying, as long as you are holding Ethereum to a different standard than the rest of crypto, you'll have no credibility, period. So I'm going to touch on this op-ed, and I'm going to click on it so we can see. I'm going to touch on this op-ed he's referring to. Moving on here, Johnny Deaton's responding to Charles Gasparino here. It says, Johnny Deaton fires back at Gary Gensler over his crypto crackdown, makes the case Gensler is overstepping his authority on this and other issues. If GOP takes Congress, Deaton will likely be called to testify. His op-ed makes a strong argument Gensler is off the reservation. And they're responding to this op-ed here that he's talking about. But here's a quote from Chairman Gensler. It says, we can dispense with the idea that crypto lending isn't subject to regulation. On the contrary, the rules have been around for decades. The platforms aren't following them. Non-compliance isn't an inevitable result of the crypto business model or underlying crypto technology. So clearly, I mean, we've been covering it on this channel with Gary Gensler and the former and the rest of their party in the SEC. It's clear that they're not for investor protection, and they have some sort of alternative agenda. Whether that's protecting the incumbents, the old banking system, their buddies, whatever the case is, and it's being exploited now. You have this article here from Johnny Deaton and Fox Business that says Gary Gensler's gross SEC overreach. Great read. I highly recommend you come read this. I know there's been a crap ton of reads and views on this article, and it's been going around on in the Twitterverse through the community as well. Absolutely massive read. Come in here and read this and get educated on kind of what's been going on in regards of the SEC overreach and regulating by enforcement and their tactics in that way. Johnny Deaton's responding to Charles Gasparino here. We're talking about fires back. He goes, at Gary Gensler, SEC claims that the SEC isn't interested in going after retail crypto holders in the secondary market, in that the 1933 Securities Act Section 4 exemptions, quote unquote, might apply to retail crypto. He continues down here, says, I guarantee you those same exemptions won't apply to the exchanges Gensler's true target. Why do you think the SEC filed the Wahi case, former Coinbase product manager, where they said there was insider trading with the Coinbase project manager there? He continues, says, declaring 9 crypto assets unregistered securities, but didn't sue Coinbase, laying the groundwork. So there's been a lot of conversation in regards of what is his true agenda. Obviously we talk about, protecting the incumbents and, looking out for himself. Obviously he has some sort of career agenda that he's trying to do. But it's like the way that the tactics that they're using with, going after these platforms, these lending platforms, these exchanges, going after these crypto projects, especially, Library and the Ripple versus SC stuff. It's like the way the verbiage they used and the way they go about doing things. Like, what is their true intention? What is Gary Gensler's true intentions? And that's what Johnny Deaton is hinting at. And he said a while back that, it's just a matter of when he, sues a major exchange, when they sue, the SEC sues a major exchange. And he was already talking about how when this case first started happening and, you had the Ripple and XRP haters, talking about, XRP being a crap coin and all these different things. But then, he came out saying it's just a matter of time before they come after your project or the next project. Whether you hate Ripple or XRP, the point is we need to band together, stick together to fight the good fight and stand up for what's right, because the SEC is only trying to come after the rest of the crypto space. Nobody's safe. And that's kind of what he's hinting at here. Moving on here, Crypto Eddie had put up this 2-minute video. I thought it was interesting. It says, former Ripple CTO Stefan Thomas, clip 1. This was June 22, 2022, I'm assuming. It says, quote, even people I was very close friends with when I was working at Bitcoin were suddenly not talking to me when I was working on XRP. Sad face. Clip 2 says, #XRP still think use case is very much alive. And then clip 3, this was 11/19, says, no one crypto wins. So let's take a listen in and see what he has to say.
But it was definitely in the early days when in the early days of crypto, it felt very adversarial. Like if you were working on the wrong project with the wrong philosophy, people would just not talk to you, not want to talk to you. Even people that I was very close friends with when I was working on Bitcoin were suddenly not talking to me when I was working on XRP. And definitely that's stuck with me because I've never experienced anything like that working on, web technologies or in the JavaScript community or just generally in the open source community, because it's much more collaborative.
Do you have as much?
And that's where we stress in the XRP community, especially, I know Johnny Deaton and, those leaders that we have in our community. That's what they talk about is cohesion, being on the same team, working together. Why are we having this tribalism? We need to understand that this is the crypto space. It isn't, us versus you. It's literally should be crypto versus everything else. And we need to work together to further our agenda and, the innovation and growth and prosperity within this space.
Equal or less conviction about Bitcoin and crypto as the future of finance as you once did?
When I first got into Bitcoin, it seemed like the solution, I think. And then I realized that because of this factor that I mentioned, which is it can't evolve quickly enough, I started to move away from the idea that like Bitcoin is the answer, and I started to look for a new answer. The use case that I'm interested in, which is moving money around the world, I think that Interledger, obviously it's a somewhat self-serving answer, but I believe that is a better solution. That's why I'm spending all my time on it. The other use case, which is, having a store of value, as well as in the case of other cryptos like XRP, for example, they're focused on being sort of a transactional asset, like a way to provide liquidity around the world. I still think those use cases are very much alive, and I still have a lot of optimism around those use cases. So it turned out to be useful, just not for the thing that I thought it was useful for, which is purely payments. Yeah, I kind of spent like almost a decade working on blockchains and cryptocurrency. And one of the conclusions I took away with was that there isn't ever going to be one cryptocurrency that wins, or like one ledger that everyone in the world is going to use, because there's so many different countries, so many different banks and financial institutions, and so many different use cases for banking and finance and payments, that you just can't agree on one technology that serves every use case the best. But
And I think everyone needs to really understand that and get behind that, because that's truly what it is. I mean, think about the world we live in now too. Just even something simple as like Nike versus Under Armour, or you got Dick's Sporting Goods versus Big Five. Like you got the same, they're providing the same services, but there's people rather go to Dick's Sporting Goods rather than Big Five, and vice versa, or Target versus a Walmart. It's like, first of all, it's healthy competition. It's healthy for the the market, the industry, whatever. But then again, it gives people options. Certain people like certain things. They when it comes to blockchain technology, they might like to use whatever, we'll say Ethereum or whatever. They like to be involved in that world rather than utilizing Solana or some other chain or whatever the case is. But there's a good point there. It's like we need to buy into that system, that it's not going to one that's going to rule them all. Obviously, when it comes to market share, Bitcoin has the largest market share, per market cap that we see, right? But that doesn't mean that it's just going to be Bitcoin and that's it, or it's going to be Ethereum and that's it. It's going to be, as they say, a handful or multiple handfuls of these different digital assets that solve real world problems that have staying power, and that's going to be utilized. Moving on here, this is from Crypto Briefing. It says BenDAO hit by insolvency crisis as Ethereum reserves drained. BenDAO is an NFT file, so like I want to say it's like a what do they call it? I forgot what they compare it to. So BenDAO is an NFT file protocol that lets NFT holders deposit their assets. So like what do we call it? Like a DeFi protocol type thing. Like people can set their NFTs as collateral. That's what I was trying to say. Set their NFTs as collateral, and take out a certain percentage of whatever their worth of their NFT is. And obviously, it's the same rules apply. If there's a liquidation, if your liquidation price number comes in, then you can lose your asset, and so on, or whatever the case is. So it says NFT holders deposit their assets as collateral to borrow ETH. It's also the latest crypto project to suffer from a bank run. So the key takeaways, it says BenDAO is an Lending protocol for NFTs. The project is currently suffering from an insolvency crisis as ETH depositors have rushed to withdraw their funds, creating a bank run scenario that could collapse the NFT market. BenDAO's co-founder Code and Coffee has submitted a proposal to adjust the protocol, but it must pass a governance vote. And it says BenDAO's reserves briefly fell to 0.75 ETH earlier Monday. So here goes the two things that I thought were quite interesting out of it. Just kind of explain kind of a little bit behind it. It says BenDAO is a lending protocol built for NFTs. It's the main value proposition in letting NFT holders deposit their assets as collateral to borrow ETH. When someone deposits an NFT into BenDAO, they can borrow up to 40% of the collection's floor price in ETH. For example, with the Bored Ape Yacht Club's floor price currently sitting at 67.9 ETH, 8 board owners can borrow up to 27.1 ETH. However, NFT depositors can have their assets liquidated if the floor drops below their certain threshold. So just like whenever you do, you utilize a lend platform or whatever, and you lend out your stuff to earn a certain yield. I think it's the same concept, and that's what they're saying right here. It says, conversely, anyone holding ETH on it can deposit their funds to the protocol to capture a yield. BenDAO claims to offer 77.54% APR on ETH deposits, with 73% paid in ETH and 4.53% paid in the Ben token. The yields come from the NFT holders who pay interest on ETH borrowed against their NFTs. However, according to the protocol's homepage, the interest rate on those ETH loans sits at 93.96%. As the rate increases, holders are disincentivized to pay back their loans. As a result, many have already defaulted on their NFTs and have gone up for liquidation, creating a quote-unquote bad debt scenario akin to the subprime mortgage meltdown that caused the 2008 financial crisis. So here's what the big problem is like the ETH that they borrowed is worth more than their current price of their so-called NFT that they had put into the platform. So it's like, why would they, pay their debts back to take an NFT that isn't worth, how much their ETH is worth that they hold that they borrowed out. So they're literally, their NFTs are being liquidated, and it's like, oh, okay, well, it is what it is. It's gone type thing. And that's how they're comparing it. I think they're comparing it to like, when people were, borrowing a lot and purchasing houses. It couldn't, when market, got hit hard, no one can pay up. So people were pretty much walking away from homes at that time. And they're talking about, creating that bad debt scenario. So that's kind of what this DAO has been suffering from. And I know they were talking about this protocol change or proposal for the protocol, adjust the protocol. I guess that's going to be going underway in regards of kind of what's happening. But they did say that they did, it said they received 500 wrapped ETH deposit that holds 486.5 wrapped ETH at the press time. So who knows if they're going to recover. But as you could tell, whenever the so-called bear market hits and things are, super bad, super negative, you can see that, certain projects or platforms or just blockchain projects in general, you can kind of see, who has prepared properly, who has, the right protocols and coding and business plan and employees in place to withstand the hard times and to come out prosperous and have staying power. You're going to start seeing more and more of these companies kind of go out. And that's kind of what happens during the bear market. And when it comes into the whole cycles of the crypto space, and I've been here since late 2017, so I've kind of seen this kind of take place, and this is just a perfect example of what can happen. And not saying that they're going to go away. Who knows what's going to happen? Just kind of a waiting game. But I'm just saying, as you can see, there's other platforms that's literally went to complete insolvency, complete failure to zero. Going to end on this from the Daily Hodl. Crypto market cap could burst to 200 trillion amid largest wealth accumulation in history. Macro guru Raoul. I just thought that was quite interesting because, 200 trillion? If we come over here, we're currently sitting just over $1 trillion. We're talking about a 200x. Good night. That would be massive. And quite honestly, I just don't doubt it. When they compare the crypto market to other markets, we're literally a blimp on the radar in comparison. It's completely amazing. I am so fortunate that I am where I'm at in life. I have the ability to invest into this space. I have the time to invest in, educate myself, creating these videos, and just be a part of this community because I truly see that this is a future. And the crypto market and us involved in it, we're going places in life. And this isn't a pipe dream for me. This isn't something that I feel like is unattainable. This is crazy. I got just a waiting game to see what happens. With all that being said, that's kind of what I have for you. Make sure you come to the Crypto is Key Conversation YouTube channel. Subscribe. Follow us on Twitter at CryptoIsKey1. I really appreciate your support. Excited to continue to grow this community. With all that being said, stay strong out there. Be Be safe.